It's Megan from Sidekick Accounting, and it is tax time. So, I wanted to come on here and I'm going to be doing a series of videos on different tax, I guess, frequently asked that I hear a lot of, especially pertaining to business, but also some of the personal stuff that comes up as usually a hot topic every year. So today I'm starting out with what is a business deduction, because I hear this all the time, especially from people that are newly forming businesses and this is their first year in operation. What are the things that I can deduct as a newly formed business owner? So I wanted to get into what exactly the IRS says. The IRS defines a business expense as something that is ordinary and necessary to the operation and growth of your business. Now, that leaves a really, really big gray area, but the biggest thing to remember when it comes to that is really to look at your business from that scope of view. And basically, the reason is because the burden of proof is on you. So if you were to ever have an audit happen, you are the one that is responsible for arguing and demonstrating that those expenses are legitimate to your business. One of the things that you can do is to keep a separate bank account, make sure business and personal stuff as separate as you possibly can and don't commingle. But when it comes to these business expenses, the other thing that you have to think about is this perception is to what is ordinary and necessary for the operations of your business. And that is an argument that you have like you can support. So there are some creative things that people come up with. One of the things that came across, in fact, this was the case in the IRS, is this woman, she was a realtor, wrote off her yacht. Now you might initially be like, what exactly what the IRS felt like too. But upon her hearing her argument, they decided that it was actually a legitimate expense. Now, here was her argument. She is a very high-end realtor. So when she would take people out to properties, they didn't want to see them from the front door. Oh no, they wanted to see them from the water. And so she took people out on her yacht, and that was how she got her. And for her, because her clientele was high end and the property she sold was high end, it was something that was ordinary and necessary for the operation of her business to be able to serve those types of clients. And so she won that argument with the IRS. And that's really the proof you have to come at it. If you can sit there and really have a solid argument as to why your business expense is ordinary and necessary to your particular business and your type of clientele, then it's probably something that you can deduct and write off. If it's not, though, then that's something that you can come up and and have trouble with later on. But if you can come up with a really valid argument, and I would run it past a couple of people, some mentors or some of the people that are tax preparers or your mentor, your advisors, your trusted advisors, run it past them to see what their take is on it. But if you have that argument, then that's what the perspective you can do it. Now I have one that's kind of the opposite. So there was another case that came up, and this person had a business where they traveled often. So they went to business retreats and conferences. Maybe they were a speaker or something to that effect. And they would always stay at high-end hotels when there were perfectly good lower-end hotels available in the same vicinity. Now, they lost that argument. It wasn't something that was necessary for them to stay at these super high hotels. They didn't entertain people there. All they were doing was using it for lodging. A lot of times the event would be at a different place. So there wasn't any real reason why that was necessary. So again, that is the scope. It has to meet both criteria. It has to be ordinary and necessary to the operations and growth of your business. But if it can meet those standards, then typically it is something that you can write off. So start there. Another one that comes up a lot is clothing. Can I write off my clothing? I never wear this clothing except for events. Technically, if it is not something that is branded or particular to your industry, like work boots or scrubs, it is not typically something that you can write off. So just kind of keep that in mind. It's a really great area. I have heard people, that they wear the exact same colors all the times, and it's kind of a branding uniform to their job. That could be something that you could potentially argue, but you would have to be super, super consistent of wearing those exact same colors anytime you're working or out at an event or out in public where you're, showing off your business. And that's a great area. So you really have to use your discretion. The clothing thing is a big one that comes up. It is definitely an area that's looked at a lot. So just be aware of that. But generally speaking, if it's an expense that fits into those two categories as being ordinary and necessary for your business, write off. If you have questions, let me know. Feel free to put them in the chat or the comments section. Not the chat, I mean, so put them in the comments section. If you are in need of tax prep help, I did put our link in there. We have a really streamlined process for helping you get your taxes done and making sure that you get all the deductions that you should, as well keep seeing if you need to go to the next step to tax planning. Hope you have a wonderful day, and I will talk to you again soon. Bye.